Welcome to today's webinar hosted by Cross River Bank, Full Court Press, how payments are fueling the online gaming boom. I think as everybody's noticed, the gaming industry is booming. According to an April 2024 report from CBS, Americans legally wagered nearly $3 billion during March Madness in 2024. Behind the scenes, companies are leveraging embedded finance, faster payments to improve customer experiences and loyalty. Today, we have Omar Sattar from Sightline Payments and Josh Chapman from AeroPay to talk to us a little bit about seamless payments, in-game rewards, and how embedded finance can boost player engagement, revenue, and shapes gaming and fintech's next level of play. So without further ado, let me welcome Josh and Omar, and if I can ask you guys to do just a quick intro of yourselves, and then we can dive in.
Sure. I'll be happy to start it off. Thanks, Andrew and Omar. Thanks. Thrilled to be doing this with you and appreciate the opportunity to chat. So I'm Josh Chapman. I'm the Chief Operating Officer at AeroPay, where I've been for the past 2 years. AeroPay is a pay-by-bank solution. We are the fastest growing pay-by-bank solution in the online gaming space. And we're happy to partner with Cross River and talk about what we're seeing in the industry and how things are changing very rapidly.
Thanks, Josh. Thanks, Andrew, and to everyone across River. My name is Omar Sattar. I'm one of the founders and CEO of a company called Sightline. I have been doing payments in the gaming space nearly uninterrupted since 2005, so just around 20 years now, and looking forward to the chat today, Andrew.
Awesome. Thank you, guys. And I'll round out intros just by introducing myself really quickly. Hi, everybody. Andrew Lambert, Cross River Bank. I lead the product team that's responsible for all things banking as a service, card issuing, et cetera. Just before we dive in, I ran across another interesting stat from the American Gaming Association. They measured commercial gaming revenue that it reached almost 72 billion in 2024. That's the fourth straight year of record revenue increase. And the two big growth drivers there were sports betting and iGaming. Each of those had 25 and about 29% growth respectively. So, huge growth, I think, across the board in gaming, in particular in let's call it online flavors of legal gaming. Omar, why don't you talk a little bit about embedded finance in gaming, how that's enabling new revenue streams, how that enhances the player experience, and Josh, jump in there as well.
Yeah, so actually to expand a little bit more on the numbers from the AGA, which is for anyone who wants to learn, would highly recommend go to the American Gaming Association. It is the largest industry trade group, and there's lots of great research and data available. And so the way we think about gaming, there's commercial casinos, tribal casinos, there's sports betting, there's iGaming, there's daily fantasy. There's horse racing, and then there's state lotteries. Those are all the legal forms of gaming activity in the U.S. And gaming is legal in some form or fashion in 44 states. The total size of the industry is closer to $250 billion. And commercial casinos are traditionally the way to think about commercial casinos. What the AGA number that Andrew was talking about is if you go to Vegas and you go to an MGM or a Caesars or a Wynn or a Venetian or a Palazzo, that's considered a commercial casino. Tribal casinos are exactly that. If you live in a state where there's tribal casinos, there's many of those you might have been to, and so it is a large industry, and the industry employs about 2.5 million people across the 44 states, and sports betting and iGaming, like Andrew alluded, is the fastest growing segment of the industry, and some form of sports wagering, mobile sports wagering is legal now. I want to say in 28 states. Online casino, what we call as if you're playing a blackjack or a poker or a slot machine on your mobile device, is legal in 7 different states right now, and that part in the industry is growing. Has been growing for the last 6 or 7 years at double-digit growth. And The brick and mortar business is obviously the brick and mortar business grows a little bit slower, but is a large established industry. And so there's a couple of fundamental payment problems to solve on the digital side and on the brick and mortar side. And I'll just jump into it very quickly. And on the brick and mortar side, if you've ever been to a casino in America, it's a disjointed experience. The vast majority of play that takes place still takes place in cash. There's somewhere in the vicinity of $200 to $300 billion of cash that cycles through U.S. casinos, brick and mortar casinos every year. It is probably the largest legal cash-based industry in America, period. And, so when you go to a casino, you maybe have cash with you, or you go to an ATM or do a credit or debit card cash advance. You take your chips, you play. When you're done, you convert that back into cash and you leave. And that's the gaming part of a casino. And when you're not gaming, everything else is digital. So it's a very disjointed kind of consumer experience that takes place. And on the brick and mortar side, historically, the issue that had existed in the early years of iGaming getting legalized and starting 2013 in New Jersey, and was there wasn't the proper MCC coding. How do you get money into an ecosystem? How do can you use pay by bank? How do you use pay by bank? So on and so forth. That with the help of companies like AeroPay, a lot of those issues are being resolved. And consumers can now easily, safely, and relatively cheaply deposit their monies into gaming ecosystems. And so the industry's come a long ways. And that I'll turn it over to you, Josh, to talk about a little bit about what pay by bank does. And
No, Omar, I think that was a great overview. And, I think the data, the AGA is a great organization to your point. There's a couple organizations out there. It's really important to understand what's happening in the industry and staying on top of it. I would put the AGA right there at the top. The one thing I would call out, I think what's really interesting to your point is the different types of gaming are very different from a payment perspective with on-prem being very cash based, where obviously everything that's happening online is more digital electronic payments. And what we're starting to see is a real shift there, where now the user expects more of a consistent experience regardless of the platform that they're on. And that growth that Andrew mentioned, part of that is existing operators growing, and it's also a lot more competition entering into the market that is driving that growth. So as a result, what we're seeing is higher expectations both from operators and from their customers, their users, to having a great experience with their payment. And great meaning fast and easy.
yeah, so one thing I will mention is, since I'm not Arapan, and Josh is too humble to say that it's about his own company, can mention in the intro. Yeah, I've been doing payments and gaming for the last 20 years, and we get asked this question a lot, and we've had this discussion with Cross River. If you're a new company, or you're not a new company, but you're not in gaming in the US and you want to be in gaming, and it's a highly regulated space, and gaming is regulated on a state by state basis with some small exemptions for horse racing and a few other things, but there's some federal laws that govern it as well. And so you really want to do your homework. It's not easy to be in the gaming space. And yeah, in the early days, it was what is now WorldPay, again, used to be Vantiv, that really broke into the space, and from a credit and debit card standpoint, and did an excellent job. Since then there's a number of other folks that are coming to the space. Everyone from JP Morgan to Fiserv to Braintree doing card acquiring. And but the number of folks that we see that are coming in new into the space is very small and very limited. And when they do come in, to actually get scale. So to congratulations to AeroPay for not only for coming into the space, for breaking through, but also to getting scale. And there's good reasons why you've gotten that scale. So I think great work overall.
Omar, thank you so much. Really, really do appreciate that. It's been quite a journey.
Well, let's drill in a little bit there, because I think, payment methods are a little bit of, an unsung hero maybe in the gaming industry. People think about wagering and winning and things like that, but not a lot of people think about how to get money in and out of the ecosystem. So Josh, why don't you tell us a little bit about how that might drive customer loyalty or different types of revenue programs for gaming operators?
Yeah, we've done a fair amount of research, and as I mentioned, with all the growth, especially in online gaming, most users are on 2 to 3 platforms where they're going to be participating. So with that, having a very seamless payment process is what's really important. So what we see, there's a couple of things that are really of importance right now for the user in that space. One is speed, and to be able to access those funds. So making sure that you have the fastest methods available, especially when a customer's looking to withdraw. So real-time payments is super important for that regard. The other piece that's very important is approvals of payments. So pay by bank is still, I think, a little bit newer than some of the other options, especially when it comes to online gaming, and users are still getting accustomed to it. The worst thing that can happen is you have a user who wants to link their bank account and use pay by bank and then have the payment get denied. So one of the things that we've really focused on as we've built ArrowPay is ensuring that we can protect the operator, provide the best experience for the user, and maintain very high approval rates for those payments, because that's always been the downside for pay by bank. So I know there's a lot of different payment methods out there. We obviously are focused on pay by bank and how do we make it as attractive as any other payment method. And that's what we're focused on, are those high approval rates and speed for the user to be able to access their funds.
We've obviously think a lot about this, Andrew. What are the things that the consumer really cares about, right? So if you set aside what we're going to call here operators, so DraftKings, FanDuel, BetMGM, Caesars, Rush Street, Fanatics, etc., are what we call operators. But let's talk about their patrons, right? The end customer, yourself, the person who wants to in fact place a wager. And the first thing that consumers care about is safety of their money, right? No consumer ever woke up and said that I don't care if my money is safe or not. And so safety and security is number one of the money. And the second thing the consumer really cares about is access to their money. They want it as quickly, as cheaply, as fast as possible, when they want it, how they want it, right? So access is number two. And the third thing we find the consumer wants is loyalty, right? All consumers want to get rewarded for the thing that they're doing with you. And whatever that thing is, it could be a gaming activity in an omni-channel world, it could be a non-gaming activity. The customer wants to get rewarded. And the fourth and final thing is the customer really wants it for free. And now free, what we found in our industry, free doesn't necessarily mean that monetarily it has to be free. The customer must feel there's value in what they're doing. This is where things come in, like where Josh is talking about speed and quickness. And we find when we first launched doing things like ID verification in the state of Nevada, and there's such a drop off. If the customer gets through the first time when ID verification is great. If your customer gets through second time, and that's also okay. By the third time, almost no one tries it. And the same thing is true for payments, and that has historically happened a great deal in our vertical. um, Originally with card processing, with linking of bank accounts, with the movement of money, given that the networks designate gaming effectively as a high risk industry, there's lots of hoops to jump through, right? You have to educate yourself on how to do the processing and how to move the money. But if the consumer ties, most consumers, if they try something by a third time, they're not trying it a fourth time if it doesn't work. And it's in that final piece that I mentioned, where the consumer is looking at for free, what they're really looking for is convenience, and that means there must be speed and accuracy. So think about when you're building a product for gaming, and safety first, access second, loyalty third, and then convenience fourth. And if you can do those four things together, the rest of it is, yes, you still have to do the regulatory work, so on and so forth. There you have an opportunity to build an ecosystem for payments that make sense in the gaming industry.
I think that's a really good segue into almost something I wanted to kind of drill in from the sideline perspective is the rewards and loyalty programs. So assuming safety and access, right? The next pillar that you mentioned was loyalty. So how do fintech players like Sightline or ArrowPay kind of help gaming operators build that loyal base or capitalize on technology to do that?
I think it's a fair question. When you look at it from a digital standpoint, and I will use DraftKings and FanDuel a lot. But this is true across the entire industry, whether you're Fanatics or BetMGM or Rush Street or whoever you are on the digital side, or the 1,300 or so casinos that do brick and mortar business, or even state lotteries. And it is there is the goal of every casino to ensure that Andrew enrolls in their loyalty program. And now, how good have historical brick and mortar casino loyalty programs been? To be fair, they're okay. In the world of lottery, in the world of loyalty systems and how much stickiness they create, and they are getting better. And so I think the goal of a payment provider should be to think about how you incorporate the gaming operator's existing loyalty system into the payment stack. And what no gaming operator needs is the payment system to recreate the loyalty stack. And so what that really means is that if I create some kind of let's just say I create some kind of an omni-channel account. I'll use an example of an MGM over here. MGM owns physical casinos in multiple states through their joint venture partnership. They own 50% of BetMGM. They do sports betting in multiple states. From a consumer standpoint, I don't really fully understand the difference between MGM and BetMGM. All I care about is that when I spend money in this ecosystem, whether I'm staying at a hotel room, whether I'm placing a sports bet from my couch and I'm going to a nightclub, whatever is the activity that I'm doing, somehow that's tying back to my spend. So the way we like to think about it, Andrew, and I think this is the way payments or fintech companies should think about it that are coming into space, is imagine as if Omer has a loyalty and money, and the loyalty and money should just follow me around. It should follow me around through the user journey. My user journey might not start with MGM by downloading the app and doing a sports bet. My user journey might have started by going to a physical MGM casino and going to a kiosk and checking in for a hotel room. And then from there, my user journey might have graduated to downloading the mobile app and placing a sports bet on the Golden Knights to win the Stanley Cup. There's a series where the user is going is where you want the money going and you want the loyalty going. So think about embedding the existing loyalty systems into the payment stack that you have, and then helping the gaming operator track that. And the final piece of that is creating an omni-channel profile on that patron. Right? What does Omer do when he leaves the casino? Right? That's the thing that everyone wants to know. Do I eat steak or do I eat fish? Do I like to drink a cup of coffee or do I drink tea? Do I go to Target or do I go to Walmart or and what do I buy? And as much of that data that is permissible and can be accessed and should be accessed and that's something gaming operators are very interested in, right? MGM probably has 20 steak restaurants and they want to know if Andrew likes to eat steak on a Tuesday or not. And if he does, they will send you to one of their 20 steak restaurants and tying it back to their loyalty ecosystem. That's what makes it really sticky if you can tie loyalty to payments.
Yeah, and I completely agree with Omar on this point. I don't think as the fintech payment provider, we need to be the ones. Our goal should be to assist and help the operators with their loyalty program. And the way we think about it, there's really two things that we think about. First, if we can do pay by bank and we can make it cheaper than some other payment methods, that can help the operator fund their loyalty program or rewards that they want to offer. So we've done that with a number of operators where we've partnered with them where we know pay by bank is a cheaper solution than a lot of the other payment methods. So if we can help them drive more volume, that can help them fund some of their programs. The second thing, and related to that, and I think this is an extension of what Omar was just talking about, is operators know who their best users are too, right? They have their VIPs, they have the folks who drive the most volume from them, and we can see that as well, and we should be able to support that and offer different payment options, cheaper payment options. If this is someone who is known to the operator, they have a lot of good information, and we as a payment provider can help them by offering a unique program, a cheaper option, again, to go back to help them fund their loyalty program. So I completely agree with Omar. Our job is to support the operator and the programs they have, not try and recreate or build an additional one to that.
Yeah, and to that, there's a very Andrew. You mentioned earlier as well about or I think Josh, you mentioned as well about cash outs that take place. There's a very particular problem that happens in the gaming industry. That's for the most part, as far as we know, relatively unique to the gaming industry. And yeah, in the networks have fundamentally always been designed to move money in one direction, right? The networks were designed to move money from a place where an account is held to a merchant. And Well, in the world of gaming, money moves in the other direction as well. Some people win, and even if you don't win, people want their money. Right? That also, when I talked about safety and security, no one ever said, I'm just going to leave my money at the casino forever and ever, and not want access to my money. There's another thing that happens in gaming, also before I dive further into this is it's a deeply and there's lots of research around this from around the world, and it's a deeply psychological, strained relationship that a patron has with the gambling merchant. And if I go to a place, and for example, if I go someplace to buy this sweater, and when I go to buy this sweater, fundamentally, my relationship with the seller of this sweater is not adversarial. When I buy this sweater, I feel good about the fact that I bought this sweater. I tell Josh about it. Hey man, you should go get the same sweater, or I'll buy you this sweater. That's how much I like this sweater. And but when a patron gambles at a gambling operator, whether it's digital or brick and mortar, even though I have loyalty to the brand, so I might be loyal to an MGM or a Caesars or a Fanatics or whoever that is, and I might be loyal to the brand, and I'm there to win money, right? I'm not there to lose money. So that changes something within a customer. So the customer says, "I'm going to put in money. I'm going to beat this. I'm going to win my bet, and I'm going to cash out my money." What that ends up doing, Andrew, is it creates this issue, what we call in the industry of churn of money. And so the customer deposits and withdraws and deposits and withdraws. And this keeps happening again and again and again. And from a cost of payments perspective as a percentage of revenue, just to give you a perspective of what that looks like. And in a traditional merchant environment, you're all payments folks, you know this, and the cost of payments is a percentage of revenue, call it somewhere between 2 to 3%, right? Fully loaded, depending on the mix of debit, credit, pay by bank, so on and so forth. And that number in our industry, in particular around digital gaming, runs closer to 9%. And now it's not so much that there is definitely where pay by bank is less expensive than certain kinds of card processing or other processing. But the issue is not the one individual payment. The issue is the depositing and withdrawal issue that takes place. And so when you all think about coming into the gaming industry, think about the nuances of the industry, right? What are the challenges? And the other question to ask yourself, and what are the challenges that you can fix? And then the other question to ask yourself in those challenges, right? If the industry is as large as we're saying it is, right? We said gaming in 44 states. There's hundreds of billions of dollars of cash flowing through the industry. Why is it that no one has been able to digitize that yet? And if one is able to digitize it, how do you digitize the million slot machines in America, or the 25,000 table games in America, for the couple of $100 billion that is flowing through this? And so really, you have to take a deep dive, think about what the issues are and what it is that you're trying to solve, whether it's from an issuance standpoint or an acquiring standpoint. And
Yeah, I think the aspect of the churn and also the digitization, sorry, easy for me to say maybe. Um, there's another factor there, and I think it has to do with kind of fraud prevention, security, things like that, where, when you have an ecosystem where there's a lot of money flowing in and flowing out, there's always opportunity for fraud. Anytime you're talking about faster payments, a former colleague of mine said faster payments just equals faster fraud usually. So how do you guys think about when we're digitizing these experiences? How are you thinking about layering in protections both for the gaming operator and for the consumer?
Yeah, so one of the things that we've done, and we think this is really important, as a payment processor that works with multiple operators, being able to understand activity at the user level and across platforms is super important. So we've been talking about this more recently at AeroPay, and it's really the network that we have and being able to drive risk intelligence. So and there's other benefits besides just the risk, but the biggest one there, Andrew, being that if we have someone who's with operator A, and they're a good, reliable person, and we can see their activity, and then they go to operator B, We know that, right? And we can understand that as we're making decisions and we're protecting the operator in that case. We can also protect the user. If they have responsible gaming concerns, if they have limits, we can see the activity there, because they're one user on our network, and we can see that. The other reason is, of course, if it's a bad actor, and they go to operator A and they have problems with their payments, we can recognize that before they get on operator B's platform. So that's something that we've been very focused on, is being able to see that activity across platforms in a way that helps both the operator and the users. But it's you have to be able to see it that way and collect that data. I mean, we hear all the time about AI, machine learning, the amount of data that's out there. But we think it's really important, with, especially as we were talking with the growth, right? There's so many different types of gaming that's happening now. A lot of it's online, a lot of it's still on premise. So it's vital that you can see across whatever the platform is and understand what that user is doing. So that has been our focus, and it's part of what also allows us then to get the approval rates that our operators and users also want. We were talking about earlier, how we make it attractive, using pay by bank in the online gaming space.
So in the way, Andrew, to think about this is, so think of the three legs of a stool, and once once you created the stool itself is the ability to offer digital gaming, right? Whether it's daily fantasy, sports betting, iGaming, and the three legs of the stool are, you need to know who a customer is, right? So that's your KYC process that's taking place, and you need to know where the customer is. So that's your geolocation process that is taking place. And the largest provider in our industry is a company called GeoComply that does that, and they do a very good job at it. And the third thing the third leg of the stool is, you need to collect the customer's money or pay them the money back. And now the three legs kind of have to work together. So need to know who the customer is, you need to know where they are, and then you need to know when their money comes in and their money goes out. And those three collectively, and I don't want to in any way belittle, the rest of it, right? But the rest of it is, you have a platform, you have game types on there, and you offer game types, but those three pieces really need to be working together. And so, to what Josh said, data is important. Tying device IDs back to location, tying back to payment type is important. Velocity of money in and money out is important, and scale is important across states. Again, as like I said, we've been doing this for 20 years. Sightline got a little lucky. We've been doing digital gaming since long before PASPA got repealed. We started doing it in 2013 in New Jersey. We started doing sports betting in Nevada in 2014. So Josh is right. Having large amounts of data on behavior makes a big difference. And um, the other thing to know is casinos in the US are regulated under the Bank Secrecy Act as financial institutions. They have requirements for comprehensive AML policies, know your customer policies, for the filing of SARs and CTRs. And I can tell you this, yeah, lots of folks in payments and banking and financial services don't know this. The casinos are very good at this. This is not like the movies, and it is not the way, we are not the way Hollywood says that we are. And well, maybe in some ways, but not in that way. And so, like we are good at this. So when banks and financial institutions like the Cross Rivers of the world really start digging in and understand what the casinos do for this, we take this very seriously. And so it's really about taking now. Banks also obviously take this very seriously, as they should. There's one other piece I'll mention. I earlier mentioned that the networks themselves still deem gaming as a high risk industry, and historically, Sightline never used to share this data. I was at a conference a few weeks ago and I publicly shared it, so I'm now going to share this on this webinar as well. And listen, would we at some point like for the networks not to designate gaming as a high risk industry? 100%, and it's like my goal in life to get that to happen. And but to share our own data, and now, our gross chargebacks run somewhere in the vicinity of 20 basis points, and our net chargebacks run somewhere in the vicinity of 10 basis points. And when you look at that in the context of all the different verticals that folks participate in for card not present processing and on the acquiring standpoint, that's pretty good. And those are pretty solid numbers. So there is certainly risk. The fraudsters are always going to come after you. I'll say one final thing, and there's been a push recently by folks like the Pennsylvania Gaming Control Board and other jurisdictions as well to really start incorporating in the know your customer part, ID verification, liveness check, selfie checks. And We're big advocates of all of those things. That's a great idea to try to dissuade people from coming in and committing fraud in the gaming industry.
The one thing I'd like to add, because I think Omar hit on a really good point, but I'm recognizing that we may have some folks who are on the webinar who are, startups getting into the gaming space. It's really important that you know who you're working with when you're processing payments, because companies like Sightline, like AeroPay, we've been around for a while. We partnered with regulators to understand how to do this. Omar mentioned GeoComply, great partner for making sure you have KYC in place, age verification, geolocation. Those things are all important. And I know a lot of times, especially with the growth in the industry, we will have companies reach out and say, "Oh, we'd love to process payments with you," but we haven't done that yet, or we don't have that in place. And we'll say, "Well, we can't process for you until you have those things in place." This is why, right? This is exactly how we're trying to protect the industry, protect banks, protect the operators. So I think it's a really good call out that you have two companies here in Sightline and AeroPay that have worked very closely with regulators to be compliant, follow the right steps. And if you have someone who comes along and says, "Oh, we can get you approved really quickly without having that stuff in place yet," that's a red flag, because I do know, again, whenever you have an industry that's growing a lot, you'll have a lot of folks who want to jump in and find ways to quickly monetize it. But it's really important you know who you're working with, that you understand what the regulations are, not just to get you live, but what's really appropriate for the industry and for the space.
So Josh is giving you sage advice. I'll say one final thing on that, Andrew, before you jump back in. In gaming, this work with the regulators, when you get licensed, they're called privileged licenses. And the reason they're called privileged licenses is because gaming believes it's a privilege for you to be in the gaming industry, doing this work. It requires an enormous amount of personal financial disclosure, corporate financial disclosure, yeah, in order to get licensed to be in the space. You should be ready for that as well. Make sure you're working with the right attorneys at a jurisdiction by jurisdiction basis. And if someone pushes you to cut corners, that is about as a big a red flag. And in having a privileged license, I can unequivocally tell you this, and you never want to be in a position where you lose a privileged license. And yeah, losing it in one jurisdiction jeopardizes you doing business in every jurisdiction. And so the most important thing a gaming company or a company that does business in gaming has are those privileged licenses, and they're sacrosanct. And so it is a privilege to be in the business, and you should spend a lot of time focusing on what the regulators are telling you.
You guys are doing my work for me. This is fantastic. I did want to ask one more question about regulatory and compliance, and you guys both have worked with Cross River really closely, and maybe are more familiar with some of the bank flavored regulations than you would like to be, but by virtue of that relationship. But for the audience, could you talk a little bit about key differences that you see between gaming use cases versus maybe traditional sort of fintech or banking use cases, and how the gaming regulators and gaming compliance aspects of that maybe add some complexity?
No, I can jump into that first. So here's fundamentally what a gaming regulator is looking for. It's actually quite simple. A gaming regulator is trying to assure the general public who is participating in gambling activity, and whether digital, sports betting, iGaming, brick and mortar, is that the game is fair. Not that the game is advantage towards the customer, but that it's fair. You're not getting ripped off. And that's the most important thing. Well, how do you ensure that the game is fair? And how do you make sure that nefarious elements, like the Chicago mob, don't do business in the U.S. casino industry? Well, you do it by creating this structure of creating of like I said, personal disclosure. So just to give you an example of what that means, and I'm licensed in dozens of jurisdictions, and our company's licensed in dozens of jurisdictions. Have been licensed for a long time, and nearly every single one of those jurisdictions has every bank account, trust, credit card, debit card that I have at every brokerage account, and I have to update that the activity I'm doing every single year for them, sometimes more often than that. What they're looking for is to make sure that Andrew Lambert has not bribed me, and suddenly my net worth went from $1,000 to $10 million. Well, how did that happen? Well, maybe I got lucky and inherited the money from my grandmother, and that's fine. That's a legitimate reason. Maybe not. Maybe I got bribed by Andrew Lambert to go, rig a game. And the example, yeah, we've spoken about. If you haven't read about it, it's a super interesting story. It recently happened where with the Texas lottery, it was written up in the New York Times. It's a really interesting story to see what happened with the Texas lottery, where they ran. It was $100 million scam, but it was clearly done with collusion. And so there's a lot of this personal kind of disclosure. So that's really what it is. There's a big difference there between that and financial services regulatory. But come to it from the standpoint of knowing that the regulator wants to know that you are a person who has integrity, and that you're not someone who is going to rig the game against the consumer. That's what they're looking for.
Yeah, and I completely agree with Omar. I think every state has my social security number now and all my
Yeah, yeah.
account information, or at least all the ones where we're licensed. But I think that the thing for if I'm looking at it through the lens of the person who might be moving into the space, creating a game or building a DFS site or something like that. It's the way to think about it as you're partnering with us and going through the process with a bank. You're going to need to be licensed if licenses are required. And if they're not, you're going to need a legal opinion. And a legal opinion, to me, this is one of the areas that I see most new entrants into the space get tripped up, is that they might be operating in a part of gaming that isn't licensed in a certain state. So then we'll say, well, you need a legal opinion, and they'll hire an attorney that they know from college or somebody who's down the street and say, oh, just write me a legal opinion. But you really need if you're not working with one of the more established law firms in the space who knows gaming really well to get that legal opinion, it's going to be hard to go through and get approval from us, and then also when we sit down and review it with Cross River or anyone else. So I think that's the one that I see most folks, especially again, growth in the industry. You have a lot of smart entrepreneurs, people who are coming from other types of gaming, but not this sort of gaming that we're talking about. And they think, oh, I can stand up a website. I want to be able to start accepting payments. There's a lot more to it. And especially, I actually think it's easier if you need to be licensed, because then you go and you get the license from the state and you're ready to go. But when you're operating in certain industries or certain types of gaming that don't require a license, so we're then going to ask you for that legal opinion. It has to be thorough. It has to be well thought out. It can't just be a 10-page document that you had someone throw together very quickly. So that would be my one tidbit that I would share. I think the other stuff is very typical of what you would see if you're establishing a bank account anywhere. I mean, there are some additional things around how you monitor transactions. We mentioned geolocation, KYC, but the big one to me is always that either legal opinion or having the licensing in place.
I'd say call, that's good advice. Just, I mean, call a Visa, right? Visa's done a great job. Visa's got an internal team that manages gaming from a network standpoint for pay by bank. Call up someone like Josh and ask them when we get referred, especially with new companies, right? The bigger companies know what they're doing, right? We work for years with them to create the framework of how this is going to work. And the key is, at least from the network side, when the issuers receive that transaction with Bank of America, JP Morgan, Wells Fargo, US Bank, Citibank, whoever that issuers received that transaction, is a very defined framework now that was built by Visa around the legal framework, around the merchant verification values, so on and so forth. So talk to Visa. I'll say one thing about Cross River, and I promise Andrew did not ask me to say this. And again, I've been doing payments in gaming for the last 20 years, and worked with a lot of banks, and successfully and some unsuccessfully, and both originally on the acquiring side, then on the issuing side, and then on acquiring and issuing. And Cross River did something. We met Cross River about 2.5 years ago, and I thought Sightline was pretty good, at compliance, and I think we were. And Cross River was difficult, and they gave us assignments, and they gave us work to do, and from a legal and compliance standpoint. So we were probably 80% of the way there already, because we'd been doing it for so long. But that final 20% of the work took a while and cost money, but is so worth it, because I feel so good about that. And so you want a bank that is going to push you. You don't want a bank that shows up and says, yeah, yeah, don't worry about it, everything's going to be fine. And you want a bank that's going to push you. And because when the time comes, and if and when there's an audit by the FDIC or some regulatory body on the financial services side, and now the bank is also confident that the operators they've onboarded have done the work that is necessary to be very good at the business. So and we found Cross River to be very good at it.
Well, that's really kind, and it's nice to know that the hard work was worth it. We've got a couple of minutes to go. I've got a few more questions if we can get to them, but it wouldn't be a fintech webinar or podcast in 2025 if we didn't talk about crypto or blockchain or something like that. So I thought I'd just give you guys each, a chance to talk about, is there a play in gaming for blockchain or stablecoin or crypto kind of currencies? What's your take there?
Sure, I'll kick things off. I think Omar probably has some more thoughts and probably a little more experience with it than we do. But we're seeing a lot of interest in crypto. There was a period a few years ago, due to some of the external factors where it didn't seem like there was a good comfort level for it. And some of it was probably fair, some of it probably a bit of an overreaction to something that happened by some bad actors. But we're hearing more and more interest in it, and there is, we think, a logical use case. I think the key is just figuring out how you get regulators comfortable with it. We've talked to a number of our partners about it, and we think, again, there is a use case, but the one thing we were talking about earlier, but with KYC, and when you're talking about crypto, you have to get comfortable with it's a different methodology, and you're not going to have all the information that you might normally have. So we definitely are hearing more and more about it. I was at a conference back in, I guess it was late February, early March. There was a lot of chatter about it, and folks are interested in figuring out how we make it work. So I think you'll continue to see that, and I think you'll see some more use cases in the next, I don't know, I would say, in the short term, let's say in the next 18 months. But I think, there's still some pieces to figure out.
Yeah, so before I answer the crypto question, one other thought just occurred to me, since we're giving advice to potentially new folks, hire someone who knows what they're doing in gaming and payments. If you look at the universe of people that know both gaming and payments is small, we find this all the time. Gaming people, folks don't know payments, and payments folks don't know gaming. But if you are starting in the gaming vertical, or you're in payments and you want to come into the gaming vertical, and hire someone who's done it before. Generally not the biggest fan of consultants, but in this case, I would say, or hire a consultant, and because the learning curve is pretty steep, and so spend the money and do that. On crypto, but like Josh alluded, there have been a couple of false starts, and yeah, we do believe that there is going to be an opening. I think it might be sooner than 18 months, and I think there's a possibility that we might see crypto in a single large jurisdiction with one or two operators in a defined ecosystem in the next 12 months. And it could be as soon as next summer, and before next football season. But the key is exactly that with crypto, right? I mean, there was a lot of discussion right before FTX happened, and FTX kind of shut everything down in about discussions of gaming, crypto and gaming. And if you are someone who is using crypto in sports betting or iGaming in America today, you are doing it illegally. And I can tell you there is no such thing as legal use of crypto in gaming today. And so if you're doing that, probably shouldn't. I'd probably advise against it. But we do think it's coming. The biggest thing is the same thing. The regulators want to know, where's the money coming from? Is it your money, and where's the money coming from? The good news about gaming is used to large dollar amounts, right? If you're someone who wants to play with $10 million, well, the Win would love to have you. If you want to play with $20 million, the Venetian would love to have you. And it takes those customers regularly. If you look at the true high-end VIP play, and it doesn't run in the 8 figures, it runs in the 9 figures. And so it's not that gaming is not used to large dollar numbers, but the question always is, if you're someone who wants to come in with $10 million and Josh is a rich guy, the Win is going to look up and say, oh, he owns a business, he's got bank accounts, he's got the ability to have this money, and legitimately. And that's what we're looking to figure out at scale in crypto. That can we tell whose money is it, and where is it coming from, and where is it going back out to? That's the key question. And I think we're going to get there.
Awesome. One more around maybe future vision, future forecasting, that kind of thing. What are the most exciting opportunities that you guys see at the confluence, let's say, of fintech and gaming to create long-term utility? Let's say, whether it's savings, rewards, and what gets you guys excited?
Listen, for us, we believe it's omni-channel. It has to be. There is no way that the casino business can forever and indefinitely exist as a cash business. It just doesn't make sense. And yeah, we think that of the roughly $200 billion in cash play, we think about of annual play, we think about 50% of that is going to get digitized over the next 5 years. And so there's about $100 billion of cash that's going to become digital. And in addition to that, what's happening in sports betting and iGaming. So again, the customer wants their money when they want it. It has to be fungible. And we know we talk about it a lot in payments of what omni-channel is. But omni-channel is a true there's going to be a some kind of an embedded finance ecosystem that delivers omni-channel payments and gaming, which we believe is probably going to become one of the most successful deployments or iterations of embedded finance anywhere in America in any vertical. And we think there's an opportunity to create 30 or 40 million accounts that are active accounts and running omni-channel in the gaming space.
Yeah, so totally agree with Omar's points there, and I was gonna say the same thing. We definitely see that same movement happening. I think the other piece, and being that we do pay by bank, we have to talk about it, right? The thing that gets us most excited is speed. So we've had RTP for a few years now in the United States. We know the Fed's working on Fed Now and introducing that as a rail that will also help speed things up. Also, request for payments or RFP, we know that's out there right now and just starting to see some use cases. But what it all boils down to is what Omar and I have said probably a few times throughout this last 45 minutes, which is, customers want access to their funds quickly. And they want to be able to move that money around. And those improvements, making it faster for pay by bank, is exactly what will help the customer and the user, and it also will help the operator. For like I said, for a few years they've been able to pay out in real time, but pay-ins are still running predominantly through ACH. And we found ways to help circumvent that by offering guaranteed ACH and having trusted user programs where guaranteed ACH wasn't necessary. But the more speed we can get, the faster rails we can get is very exciting. And we know that we lag behind the rest of the world in the US where that's concerned. So we're very excited about that. We think that's going to create a lot of opportunity that's going to benefit both the customer and the operator.
Just on that kind of faster payments topic, Omer, one of the things you mentioned earlier was that customers they value value. I'm not going to say free because we know free is hard and it's not really free necessarily. But from a speed to payment standpoint, are you guys seeing sort of an appetite to pay a little bit to get your money out faster? Or I guess what does that look like from the consumer perspective?
Listen, what the consumer really wants is, so the behavior I'll give you an example of a consumer behavior. Let's just say it's Monday Night Football, and the behavior that Andrew does is you want to place a $20 bet. Well, what you do is you deposit $100. Let's just say you use pay by bank, deposit $100, but what you really wanted to bet was 20, right? Now that $100 transaction didn't cost you, Andrew, anything. The operator paid AeroPay something for bringing that $100 in. And now you've got $20 in your $100 in your account with, let's just say it's DraftKings, and you wager 20. Now you say, you know what, I'm going to cash out my 80 because I only wanted to place a $20 wager. And you use some kind of method, pay by bank or some other method, and now you push the money back out. But 20 minutes into the football game, you decide, oh, I want to place another wager. And so now you deposit another 100, you wager 20, you cash out 80. And the consumer keeps doing this again and again and again. So at the end, there's going to be some net settlement that takes place. Let's just say you won your first bet, lost your second bet, but that kind of in and out, keeps adding up. So when we ask, and we've asked thousands of consumers, we work with operators around the country, with the 7 or 8 largest operators. We've asked thousands and thousands of consumers these questions. We've asked these questions in detailed interviews of dozens of dozens of consumers. So why do you do that? Why do you keep, and the answer is always the same. I just want access to my money. And, that's what the consumer says. And so in their mind, it's not about whether it's in and out. It's just, I want access. I want the ability to be able to spend my money or use my money even though the consumer might have no intention of spending that money elsewhere, they actually intend to come back and wager another 20 and wager another 20. In their mind, they just want the access. So I said, I mean, what Josh mentioned, we've been telling folks this in the brick and mortar casino business, and we think RTP and Fed Now and RFP is going to fundamentally change how brick and mortar casino payments are done, not just digital payments. The fact that you go to a casino today and pay a $10 ATM fee to do a transaction and is insane. Like who, like I mean, it doesn't make any sense at all. And um, or that you spend 5.5% to do a credit card cash advance in a casino, to go then spend the money in the casino. And we think folks like AeroPay, once they start deploying at scale RFP, or Fed Now, and the cost of that money and the speed is going to go down so much, and it's going to fundamentally change the economics of how payments are done in physical casinos. And
Well, I guess on that point, right? So I think we spent a little bit of time talking about online gaming channels and a little bit talking about brick and mortar, but are there fundamental barriers to enabling, electronic payments in the brick and mortar space?
I
Or
mean,
is that something we can talk about? I don't, yeah, I don't
no,
want
no,
to.
listen, it is, listen, at the end of the, yeah, I mean, yes, there are, right? Because so if you think about again, if you've been to a physical casino and yeah, and I started my career in the physical casino business, I can spend a lot of time talking about it. And but at scale, it's still like it's a cash-based business. And so if you are just an ATM provider, or like actually let's take a step backward. Let's ask yourself this question. When you can go to dozens and dozens, hundreds of casinos, brick and mortar casinos around America, whether they're tribal or commercial casino operators, and at almost none of them will you ever see a bank ATM, right? You're not going to see an ATM from a Citibank or a Bank of America, and not on the casino floor, and almost never off the casino floor. So then ask yourself the question, why is that? When I leave the casino world, and outside of going to a convenience store or a Cardtronics device or something like that, bank ATMs are everywhere. Well, there was a time when there were bank ATMs inside casinos as well. The largest provider of ATMs inside casinos used to be Wells Fargo and Bank of America. There's a very good reason why they left the business and why they're specialty companies. The two largest companies that are in the business, and it's a consolidated business, is a company called NRT and Every. And they're the two largest providers of, so it is specialized. There's specialized software, there's transaction uptime, and very high utility ATMs. And one of those kind of ATM Tito kiosk devices. And if a normal ATM, might have 20 or $30,000 of cash in it that is sitting inside of a convenience store, a casino ATM might have $250,000 of cash in it. And so the high usage, high utility, integrated into loyalty software and kind of devices. And our belief is those devices, like I said, are not going to go to zero. They're just going to come down in how many devices there are. And so the average math is basically for every 100 slot machines inside of a casino, there's one of these ATM Tito kiosk devices. That's basically the math. And so for like I said, there's about 1 million slot machines in America. So the entire ecosystem is about 10,000 devices deployed, give or take. And what's going to happen is over time, that math is going to go from the casino is not going to need one per 100. They're going to need one per 200 or one per 300 because the rest of the payments are going to be taken over by digital payments. So from a casino standpoint, that's great. There's less capex, there's less cash handling, so on and so forth. And so even if you're thinking of coming into the brick and mortar space, it's real. In fact, it's more difficult for a new payments operator to come into brick and mortar space, and because there is specialty hardware, there is specialty software, and there's licensing. Right, you have to first build the hardware, you have to write the software, you have to get licensed. So it might need to take you 2 years to come into the space to compete against one of those folks. And so if you are, digital is a little bit easier, but brick and mortar is hard. And
Yeah, and Andrew, I think you asked a really good question of, is there a barrier? If I go, think about that, I don't think there's a technical barrier, right? I mean, we all have one of these now, and that's what allows you everyone's transacting online on their phone. So you can have, if you have a phone inside of a casino, you can easily facilitate electronic payment. Um, what I think the bigger barrier is exactly what Omar's describing, which is just there's this industry that's been built over many years and it works really well. I mean, it's been working, and we've had some conversations with operators for on-premise implementations, but it's not something that they can do overnight because there are these other systems and it's something that's been built over many, many years. So I think the biggest barrier right now is just changing that process because it has existed for so long in a certain manner. It was cash based. And now, there's an opportunity to shift it. And I think the biggest barrier is just getting one, the prioritization from a technology standpoint to invest in it and going digital. But that's the barrier. There isn't another barrier that I can think of outside of just changing the existing process. The technology's there. We know it works. We know it can work. And I think totally agree with Omar. You have to be licensed. You have to be regulated. All the things that we've learned through online. But you can definitely bring it into the brick and mortar. You just have to get the folks there to prioritize it and to take the time because there's a technology stack that it's going to have to fit into.
There's one final piece there that I think that is worth mentioning. That is again a very particular nuance to the industry, Andrew. So if you're in the brick and mortar business, so let's just say you're a casino and you do charge that $10 ATM fee. Well, a third party, like I mentioned, an RT and Every has come in and put an ATM there, and a $10 ATM fee is being charged to the patron. Well, the vast majority of that ATM fees is actually coming back to the casino as revenue, and if not 100% of that ATM fees. And so the casinos are effectively renting space inside of their casino in a cash-based industry to charge the patrons and receive a fee income for this. Now, that's 100% margin business for that, right? There's no corresponding expense for the casino against that. And so if I'm a casino CFO and I say, oh, I make $100 million a year from casino ATM and credit card cash advance commissions, and now you CEO or head of strategy or head of omni-channel wants me to give this up because in the digital world, the patrons pay no fees. And so whether you're DraftKings, FanDuel, BetMGM, Fanatics, the patrons, the Rush Streets, if you're the patron on those in the digital world, you don't pay any fees. And so if the customer is going to do a digital transaction and there's going to be no fees at all, and they're going to be able to bring money to the casino, so the CFO tells the CEO, "What do I do?" Right? You're telling me to give up 100 million, and what does that mean? Well, lots of folks have done the math on this and asked the question, well, how much incremental spend does there have to be in order to compensate for the fees that the brick and mortar CFO is going to give up? And we know what the number is. It's somewhere between 3 to 4%. And there's going to be an incremental 3 to 4% lift in play, which compensates for the fee revenue that you're giving up. And well, there's about 100 casinos in America, give or take, that are running some form of omni-channel cashless right now. And I mean, from all of those that are running, the lift and play has been in the double digits. And for some cases, it's been high as 15, 20%, and some cases it's been even higher. So we know the math works. But the lift and play happens over time, and you have to give up the 100 million immediately. And so as long as a casino has a strategy saying, yes, I want to do this because over time this is much better for me and for my consumer, and I'm willing to give up the short term. And so those are the kinds of structural things that you have to get through in an industry. But I'm confident, like I said, over the next 5 years, we genuinely believe that there's probably 100 to 150 billion dollars to digitize in the industry.
That's tremendous. Well, listen, we've got a couple of minutes to go. I just want to thank you both for your time this afternoon or this morning, I guess, depending on where in the world you might be. And give it to you, Josh, and then you, Omer, for any closing thoughts, whether that's advice to folks that want to enter into the market or anything else that you want to share, just as your last thought for the afternoon.
Sure. So I know we have 2 minutes, so I'll quickly thank both of you. This has been an awesome conversation. I feel like we could have sat here for another hour and continued it. The biggest thing I will go back to what I said earlier, especially for folks who are thinking of entering the space. As you think about your payment partners who you're working with, I would be thinking a lot about who has built it the right way from a compliance standpoint, who's trustworthy, who's transparent. You've just seen the two of us talk very openly about how we do things, how we see things. We believe transparency is very important in payments. So that would be my biggest advice. Just know who you're working with, make sure they're reputable, compliant, and that they're honest with you.
And I'll just say, call AeroPay and call Andrew. Andrew, and yeah, CrossFit will educate you. And yeah, same advice. And call up people who've done it before. If it feels shady, it probably is shady. Don't do it.
Great advice from both of you. Thank you so much, especially the plug. Come give us a ring. But again, just want to thank you both for your time today, and look forward to seeing you both soon. And thanks
Thanks a lot.
everybody
Yeah.
else for joining. Appreciate it.
Take care. Bye bye.